Hello and welcome everyone. My name is Joel Comerford and I'll be your host for today's session. I'm thrilled to have you join us for this end of financial year reporting checklist webinar designed to help your business stay compliant, avoid unnecessary ATO audits, and start the next financial year strong. We're joined by a very special guest today, Timothy Quinn, Head of Tax and Accounting at Lawpath Tax and Advisory. Tim is a chartered accountant with 17 years of experience helping businesses optimize their tax positioning through smart planning, compliance strategies, and financial structuring. He's led tax divisions at the director level and brings a wealth of practical insight for business owners at every stage. What will Tim be covering today? Step-by-step end of financial year reporting checklists. So finalizing income, expenses, payroll, and BAS. Ensure superannuation and logbooks are up to date. Write off bad debts. Export key financial reports, P&L, balance sheets, etc. And what else do we have? ATO compliance, must-haves, accurate income reporting and proper deductions, BAS lodgements and super payments, record keeping, best practices, 5-year retention, etc., and audit triggers to avoid. It's a big one. Smart tax planning tips, so timing income and expenses, super top-ups and prepaid expenses as well, year-round habits to simplify tax time. What else do we have? Oh, so much to cover. Common mistakes to avoid. So mixing personal and business expenses, filing late or missing records, claiming non-deductible private expenses, and essentials for end of financial year deductions. So for sole traders and freelancers, office tools, subscriptions, marketing, deprecation. And what have you been missing? Training, prepaid expenses, client-related costs, etc. So much more to cover, but I'm sure Tim will jump into that. I should also mention we will have a few minutes throughout the call to go over Lawpath's business plans, including our legal and accounting support, how we can help you stay compliant, streamline admin, and save money. So whether you're a sole trader or a growing company, our team and tools are here to support you year round. And right at the end, guys, we will have a Q&A. We like to have questions thrown out throughout the webinar, so we will do our best to answer throughout. But if they're longer and if we get later on in the call, you want to save it to the end, we will have a Q&A at the end. I will send an email out with the slides from today as well as more information on what we've discussed today. And yeah, that should be everything. Tim, please take it away.
Thank you very much, Joel, for the warm introduction as ever. And thank you everyone for joining in today. You might be thinking, why are we talking about financial reporting? What's the point? We only care about tax. Who cares about financial statements? I'm going to make you care about financial statements. That's not a threat. It's an incentive. What are your financial reporting obligations as a small business in Australia? I dare say most of you on this call today will have none. You probably won't have to lodge your financial statements with anyone. ASIC doesn't care about you. I'm sorry to say, the corporate regulator thinks you're too small fry. Not that it's doing a lot about the big fish out there in the sea at the moment, but it does what it can. Most small businesses, so if you're a small company, a PTY limited company, you've got less than 50 million of revenue, fewer than 100 employees, less than $25 million in assets, which is most businesses in Australia, the staggering majority. You do not have to lodge your financial statements with anyone. Now, let that sink in for a second. If you're a not-for-profit business in Australia or a charity or an other not-for-profit, you probably have slightly higher financial reporting obligations, actually, potentially to the ACNC. But if you're a small for-profit, ASIC doesn't want to know you yet. Don't take it personally. In that scenario, why bother doing it at all? Aren't we only here for compliance? No, you're not. If you're running a small business, guess what? The tax return you do at the year end is for the ATO. If you've ever tried to look at a tax return or at your own business's tax return at the end of a year, and if you've been able to make head or tails of what it actually represents for your business, you're a better accountant than I, and I take off my hat to you. The format of those tax returns is incomprehensible, and there's basically only about 4 numbers on it that are useful. There's almost no balance sheet. There's about four numbers on your entire balance sheet, which tells you nothing. The breakdown of income and expenses is wild and useless. If you all you've got at the end of year to show for the year before you in your financial reports is a tax return, good luck with it because you're not going to be able to use it for anything that we use financial reports for. Your financial reports are for you. So they tell you a lot about your business. They tell you a lot of nitty-gritty stuff. A seasoned business person or a seasoned accountant can tell a lot from a set of financial statements. Even the small form financial statements, so what we call the special purpose financial statements that most businesses that do financials prepare, even those statements we can tell a lot. And the less said for full sets of general purpose financial reports that go to 50, 60 pages, the better. We don't want to be doing them unless we have to. But straightforward, simple financial reports, the sort that you can put out from zero quite simply. And we've got a zero partnership offer for you out there if you're not on zero yet. But those sort of reports are incredibly valuable to see things about your business and to understand what's going on. Not just that, the financial reports are the foundations of your tax return. What I mean to say is when we as tax accountants sit down to do your tax return, we don't look through your shoebox of receipts. We do it at some point, but how do we actually draft your tax return? It's not plucked out of the air. We start from your financial statements. That's the starting point. You might see sometimes that the profit in your tax return isn't the same as the profit on your financial statements. That's okay. It's our starting point. So a lot of what we do as tax accountants is based on your financial statements. Now, what that means is that getting your financial reports right is really important to make sure you're not missing out on deductions or potentially overclaiming as well. How many times has it happened that you've been desperate to get your business's tax return in July because you know there's a refund coming? Fantastic. You put it in, your accountant does it, they lodge it for you. You then sit back in September and go, I forgot to give them the list of the $50,000 of invoice that I paid on my personal credit card. That month when cash flow was tight in the business, I used my personal credit card. Now those expenses are business expenses. You can still claim them. And sure, you can go back and open up your tax return and lodge it again. You can lodge an amended return. Good for you. You've just paid your accountant more to do what they could have done once in the first place. And anytime you're opening up and amending a tax return, you're exposing yourself to another audit risk, luck of the draw, even if you're squeaky clean. We don't want to do that. So get your financial reports done right the first time. Start thinking about it now. We're what, 5 weeks away from the end of financial year, 5 weeks and change. Now's the time to get it all in. So you've got a smooth set of books. Your accountant can go out and do a really reliable set of returns for you. Make sure they're claiming everything that is on there. Little hint there. Not Lawpath. So Lawpath at Tax, we offer transparent pricing up front, and we have very straightforward packages that suit small businesses. Most traditional accountants out there will go out and scope and work out how much they're going to charge you for a set of tax returns. The very first thing they'll look at is the quality of your financial records. If your financial records are beautiful and squeaky clean and they look right, you're going to get a cheap tax return. If they're all over the shop, things aren't reconciled, things aren't done, your tax accountant is going to have to charge to make up for it. So bear that in mind too. Good cost saving obligation, good soft cost saving reason to do that. The final point, I've been on the buying and selling side on behalf of my clients of businesses, small businesses. And so I've been in a lot of what they call data rooms, for those of you that know that terminology. I know what investors and business buyers are looking for when they're going to buy a small business. If you can come up on day one, if you're doing it yourself or going through a broker, you've got your financial records. Here's my last 3 years of financial reports. You are on the ladder to success. If you come in and say, oh, I think my accountant's got something somewhere and it's a tax return and it's a spreadsheet and it's nothing else, you are really going to start underwater. It's going to be a difficult thing for you to demonstrate value to investors. Now, us accountants, we all do the same sorts of financials. If they all look familiar, it's because we've had these common principles for hundreds of years now. We know what to look for, and we know that we feel a sense of calm when we see financial reports that look like what we want them to look like. Help your investors, potential investors, see that. You might not be looking for investors now. Things might change in 3 or 4 years. You might be looking to sell your business or attract some people into it. So get it done right. All right, what do we need to do when it comes to our financial reports in the run up to financial year? Again, why does it matter? We've got lower tax risk. Like I said, if everything's right and nice and clean, then it's a nice, easy prospect to do your tax return. And as I mentioned, the lower accounting fees and making sure we maximize those deductions. Making sure we avoid ATO penalties. The ATO is getting cleverer and cleverer. And I met up with a few of them. We were at a business franchising expo event on the weekend, which was a wonderful event. If any of you were there, down in Sydney, we'll be up in Brisbane and down in Melbourne in throughout the rest of the year. But I met these ATO people and we had a little chat about their data matching. So about how they can look into, and when I say they, how their wonderful AI systems can look into financial reports as dictated to them through a tax return. And the thing that shocked me the most was that a lot of the red flags are looking for things that just look wrong. Not particularly that look big. It's not just big deductions anymore that stick out. It's things that don't make sense in reference to each other. And if you're sitting down and doing your tax return or your reports, your hands over your eyes and you're making stuff up as you go along, they are quite sophisticated in being able to pick that up. So if you have internal consistency in your financial reports, it will put you down a notch in the risk profile and the chance that you get picked up for a random audit because the random audits are not random. So having those records in good shape will help you avoid ATO penalties and audits because again, even if you've done the right thing, audits are a painful process. And of course, financial clarity. Like I mentioned, the financial reports are for you. They're for your purposes, and your accountant should be able to tailor them to help you see what you need in your business and inform the next financial year. That's why it's a good time to do it now. Don't leave it till the last minute. Don't leave it till May the 15th, 2026 to do 2025 tax returns and financial statements. Do them now. Do them while it's fresh and while it's able to inform the next financial year to help you make those difficult business decisions. So what do we need to get finalized? There's a lot of information there. I'll break it down into the core things. If you have the MYB or QuickBooks and you've got all of your banking linked to it and everything's reconciled, by which we mean we've matched the cash transactions to the accounting transactions, you're 90% of the way there. Your accountant will love you. They'll welcome you into their warm embrace as their favorite customer if you are able to get your books done like that, or your bookkeeper, of course. Now, what does that mean? Ideally, we've got invoice support for large transactions, particularly for strange transactions, I guess. If you've been issuing your sales invoices through your accounting software, they'll already be there. Fantastic. But your big expenses, your capital purchases, your equipment, your leases, if you've got some documentation attached, vanishingly easy to do. Drag and drop process to attach source documents to your Xero file. Incredibly easy, incredibly straightforward. Because you might remember now what was going on in a particular transaction. I guarantee you, because I've been in the same situation, you've got no idea what happened when it's 4 years down the track. Other than that, other than getting your financial software reconciled, what else do we need to look out for? Payroll's a big one. So very soon, starting 1 July, and I can't remember how long you've got. I think it might be about 14 days. Don't quote me on it. You've got to finalize your STP, your single touch payroll. Now, you've been doing that as you pay your employees throughout the year. Every time you pay them, you're clicking your single touch, you're clicking your lodgement to the ATO. You still have to do a year-end reconciliation that just in case you've had some funny business going on in your payroll where you've done a reverse of a particular payroll and you've done it again or you've doubled up. It happens all the time. Just a quick year-end confirmation. The information that you put into that goes out to your employees via MyGov. Used to go out via the pay slips or the group certificates, we used to call them, or PAYG summaries. You actually do not have to provide them anymore. And I would say 95% of businesses in Australia still do because people are used to them. So this is the summary that says, Joe Blow, I paid you $95,000. I withheld $20,000 in tax. Here's our ABN. That form is not technically required anymore. Most people still provide it. employees like to get it. It's a nice bit of security. And then that information, of course, is with the ATO, and they use that to data match. As I mentioned, they love to do data match everything, but make sure your payroll is finalized around year end. And certainly, if you have got some instances of underpayment that you've found out through your reconciliation process, now's the time to get fixed up. There's no time like the present. Anytime you realize payroll or super is underpaid, uh, fix it up today because that will limit your exposure to penalties and to interest. And also it shows good faith on you as a being an honest mistake rather than you trying to commit wage theft, which is a very loaded term that small businesses hate, but the government and the ATO love. So make sure you sort it out in terms of payroll. Of course, your BAS. Look, if you've had an accountant like Lawpath on board and that includes all of your BAS, you will be up to date, so don't worry about it. But if you're doing your own BAS, maybe you forgot one, the old December BAS, if you had a long Australian Christmas break that stretched into February, maybe you didn't get it done. Again, now's the time. Get everything reconciled and done pre-June. Inventory for those businesses that actually do stuff and don't just push bits of ones and zeros around, you'll want to do a stock take. You're almost obliged to do it. You've got to keep accurate records, of course. If you haven't done a stock take for a long time, might be a shock in terms of a bit of a reconciliation to true up your inventory. But you can get it done as close to 30 June as possible. And of course, logbooks for those of you that have got using the logbook method for your motor vehicle deductions. Make sure that you've got a period and it hasn't expired because, of course, you can't use that old logbook for indefinite number of years. You still got time. The tools that you can use, I always recommend that you do have a cloud-based accounting software. If anyone's still got an old Windows 98 box trying to run MYOB Premiere version 4, please get rid of it. You're causing everyone nightmares. Get onto a cloud-based software. It will keep you updated. It means that it's got data linking and things like that. It is a no-brainer for a small business to have a cloud-based accounting software. We at Lawpath are agnostic. We do work with clients with all three of the major suppliers and a few of the smaller ones too. I like Xero. It's just a personal recommendation, but they all get the job done. And it's much better than trying to keep a spreadsheet. It's a million times better than having a shoebox, and it's a billion times better than doing nothing at all and giving me some paper bank statements and hoping I can make sense of it. For everything else, have a Google Drive, have a Dropbox, have a SharePoint, whatever your flavor. Again, just a digital storage mechanism for you to keep your records is going to be important. Don't just leave it in your emails, but if it's in your emails, at least it's somewhere. Again, just do the best you can. We are none of us perfect. Do the very best that you can. The ATO has a couple of apps out there. They've got a My Deductions app. Look, it's fine. It's pretty basic. It's fine for small businesses, sole traders, I would say. It's fine for individuals to keep a track of their deductions. It's probably not going to cut the mustard for a real business. There's things like Expensify. There's things that loop into all of the three aforementioned accounting softwares that will help you get your phone out, take a photo of a receipt, ping it to the right spot as soon as possible. Any of those systems are great and they're affordable and they will make your life at year end a lot easier. So you won't spend the next 5 weeks scrabbling around trying to remember, is it in mum's or dad's wallet or purse, or is it down the bottom of the well next to the accelerator? Probably time for Joel to step in on this one, unless you're happy for me to chat, Joel. I did already mention this zero offer. Look, don't sweat it too much if you can't write down that URL. Obviously, we are going to be sharing this video out on our YouTube, and of course, you can find this if you are a Lawpath customer, which I'm sure you are if you've registered for this. If you have a look on the partner offers, you will see this on our website. Clicking that link will enable you to get 90% off Xero for the first 6 months. If I'm fortunate enough to have you as my client as a Lawpath tax and advisory customer, I can extend that as 10% off for the rest of your natural life after the 6 months is up. So if you're not sure what's out there, try them out. Xero is probably the market leader at the moment, and that pricing point is very attractive. Anything to add, Joel?
No, I think that was perfect, Tim.
Very self-explanatory, isn't it? Click a
So
link, click a link, get a saving. We like that. All right, tax compliance. So you've followed my steps. You've got your financial reports in order. Fantastic. That's not the end of the problem, of course. Although now that we've got those financial reports done, we do have a leg up. Let's just quickly turn our mind to tax compliance and our requirements and obligations there. We got filing dates for everything. So if you are self-reporting, if you're doing all of this alone, you've got usually 28 days from the end of the quarter to do your BAS, a nice extra month off over that Christmas BAS period to account for our beautiful long summers. If you're with a tax agent like Lawpath Tax and Advisory, we do get an extension. So we get an extra 3 weeks on most of those deadlines, which is nice if it's taking you a bit longer to get things done. Your annual tax return will depend on the type of business that you are. I would say that most small businesses these days will have a 15th of May deadline if you're with a tax agent. So you do have a good 11 months practically. We can squeeze that into early June. We're not supposed to tell you, but as a tax agent, we can actually get that lodged by early June without any penalties. That is a full 11 months. Plenty of clients do make the use of it, particularly if you know you're going to have tax to pay. Maybe you're not that keen to get your tax return done. Look, I would still say get it done early. At least you know what the bill is going to be. We don't have to lodge it until the last minute, so it doesn't have to be paid until May. But talk to me in July and August. I can tell you at a previous firm I was with, we had a lot of research and development tax clients, which meant that they had a lot of tax refunds coming their way, and they would be banging my door down on July the 1st to be at the front of the queue. So if you do expect a refund, it might be because you've paid installments throughout the year and business wasn't as great as you thought. Then you should be banging down the door of your accountant and making sure that you get yourself prioritized. Over at Lawpath, we know who we expect to have a refund and we'll be prioritizing them. What else do you need? Again, it depends on the type of your business, but there will be some form of a tax return. It can be as simple as if you're a sole trader, your personal normal tax return with an extra little couple of pages for your business schedule. Can be more complicated. Can be a company tax return, partnership, trust. We do them all. We understand them all. They are essentially talking about the same things with a few key differences for what happens to the taxable profit at the end. So make sure that you've considered them all. We'll talk quickly just at the end about the difference between self-preparing and getting a tax agent, a professional to do it for you. I would say if you very quickly, if you were doing your BAS yourself, good luck to you. I think there are people out there that can do a very fine job of self-reporting a BAS. I've yet to find a company that has self-reported their annual tax return correctly. So I would say if you need to keep your powder dry, if you're only got money for one, pay for the year end. But ideally, get some professional advice along the way as well. We've talked about this. I talk about it in every single webinar. I am trying to just drill it into Australian small businesses. Record keeping is something that you need to take seriously. You need to do it at the time because you will forget the longer you leave it, and it gets worse quality the longer you leave it. If you can set aside a few, maybe a half an hour on Friday night after a busy week with a glass of red wine and just getting your accounts in order for the last week, you will thank yourself. You'll thank your future, or your future version of yourself will thank the past you. It is just so important to get right. You've got to keep these records for 5 years. Anything involving payrolls for 7 years, which is why we like a Google Drive or something like that, because you can leave it there in perpetuity. That can always be there for you to come back to. All right, what does the ATO look at? No, like I had this little chat that I was talking about earlier, and I've known obviously there's lots of fine people that work at the ATO. They are very experienced accountants, a lot of them have seen it all. I would say a lot of them are actually on your side. You might not think of it. A lot of people think, oh, yeah, bloody ATO, they're out to get everything. The ATO are out there to administer the tax laws. They don't set the tax laws. And actually, they have, they don't always keep to it, but they do have a charter, a taxpayers charter that they try and keep to, particularly for small businesses where they are looking to help you. With that in mind, What are they looking for and what do they not want to see? And just going to quickly pause for a comment from Marina. I think she's going to support me on this. Marina says that she finds mistakes in GST when clients don't use a BAS agent or a tax agent, I would say as well. And yes, when you haven't used an agent along the way, I think I made this point in my first slide or second slide. When you haven't had a professional doing the accounts along the way, if your books are in bad order because there are GST errors, yes, it becomes a lot more expensive for accountants to do your final year-end stuff. Marina, I would agree with you. I think GST was designed back in 99 or 2000, whenever it came out, as being a simple tax, as replacing all these state taxes. It's got gradually more and more difficult, particularly for those small businesses, off the top of my head, with overseas subscriptions, with zero subscriptions for that matter, paying for Google AdWords. Are there GST on these transactions? It's hard to tell. You can't always tell. It's a difficult thing to get GST right these days. Thank you, Marina. Back to the ATO. What do they want to see? They want to see accurate income reporting, of course. Is there a degree of discrepancy there? Do they have a materiality threshold? Not a formal materiality threshold. You have to really prize it out of them. But do they care if you make things wrong by $1 or $10 or dare I say $100? Probably not. What they're looking for is the bulk of it, the material, quantum of income. Have you made sure you've reported it all? They can pretty quickly work out if you haven't. They've got ways of knowing, which I'll go into. What do they want to see? They don't ask for deductions up front. Pardon me, for evidence of deductions up front. We have a system of self-reporting of our taxes in Australia, as most developed nations do, where we tell the tax office how much tax we pay. Sounds funny when you put it like that. We're not asking the ATO to tell us how much tax to pay. We're telling the ATO this is how much tax we're going to pay. But of course, you do have to have evidence for those deductions, and they can ask you for them, and they do. So it's a fairly routine thing in my office where we'll get a phone call from the ATO and say such and such client has claimed for $30,000 of self-education expenses. That sounds like an awful lot of money. Are you sure that that deduction is correct? The easiest way to shut down that conversation and not to go into a full-blown audit is to say, well, actually, while I'm talking to you, would you like me to email you the invoice? Because I can see the invoice. It's from the Royal College of Surgeons, and they've charged my mate, Dr. Collins, $30,000 just to do 6 months of surgical training. Oh, problem solved. So if you have that evidence available at hand as well, and you can quickly shut down audit queries, that's the best way to do it. The ATO knows about your compliance history, and they're starting to get a bit antsy with those that have bad compliance history, to the point where if you're a perennial offender in terms of late lodgements or no lodgements, they're going to increase your lodgement frequency. Now, what's the common sense there? You're failing to meet your quarterly obligations. Guess what? We're going to make you report monthly. What's the practical outcome of that? They'll probably be able to shut you down earlier. So maybe that's the secret objective of that. They do want to see that super is paid on time. Super, you might think, unless you've turned your mind to it, why do they bang on about super so much, especially compared to GST or other sort of things, or even income tax? They care about super a lot because, of course, super is effectively wages that we're all giving up, that we're all being forced to put into a super fund and save for our retirement. It's our money. So that when they say wage theft, they include superannuation. And again, when I say the ATO looks for records for 5 years, it just means that they can look for records going back to 5 years. On the other side of the equation, what if you've been a naughty boy or girl? What are those red flags? What's going to make your returns stick out? Because again, system of self-reporting, we're lodging however many tax returns it is. It'd have to be about 10 million a year, wouldn't it? They don't have time to look at all of them. So what's going to get red flagged? What's going to get pushed to the top of the list? Unusual and large deductions, yeah, like I said, the phone call about the $30,000 of self-education expenses, we'll get that every day of the week. Unusual, when you're doing your tax returns, you, of course, whether you're doing a company tax return or an individual, you're not just lumping it all into one label, you're spreading it out depending on the type of the label. If it's unusual, if it's a label that most people in your area of business do not claim for or have very small claims for, and yours sticks out, expect to get a question. Again, late and inconsistent lodgements. I have been told, and I take it on good faith, that if you are late and inconsistent with your lodgements, you do get a risk factor applied to your tax return. And so yes, that is certainly something that pops up. For those in the chat, I will come back to your questions that are coming up now. Um, and then all of the separation between business and personal finances. If I talk about your accountant wanting you in their loving embrace, in their warmth, please try and keep separate bank accounts and separate cards for your personal and business finances. There's nothing worse than trying to sit down and work out fringe benefits tax and trying to work out simple tax returns when it is very clear that there's been an intermingling. So you almost get to the point where you're tempted not to claim anything in a set of transactions because it is so difficult to work out what might be business related and so risky from a tax risk perspective. Please go the extra step. Westpac out there has free business accounts and very low fee business accounts. Get out there and get one. It's going to save you a lot of hassle and it's going to help you maximize your deductions. The ATO hates when they see intermingling. The very first thing they do when they see that, imagine if they're looking at your 2024 tax return and they found that you've been claiming personal expenses. What do you reckon they're doing straight afterwards? They are going to open up your 2023 tax return and your 2022 tax return, and they'll go back as far as they can. So don't let that happen to you. And of course, lots of cash transactions. If you can't trace it, particularly in today's market where cash is dying off, really, isn't it? If you're a business that is cash only, be prepared to be able to answer questions and have things like till taking receipts at least to back up that you are a cash business and that that's all legitimate. Just before we move on, look, Nathan's asked, love a bit of discussion about Division 7A. Let's see what we can fit in. We'll see if it comes up naturally. If not, we'll have a chat about Div 7A at the end. And Marina's asked, do we have Div 7A agreements? We have some agreements on there, on the legal documents side of things. Certainly for Lawpath Tax, we obviously deal with a lot of clients with Division 7A issues, and we'd love to chat. And Marina's just popped in with a client with 29K in self-education and got a private ruling and they allowed it. Good on you and good on your client for getting that through. Self-education is one of those areas where there's been a lot of case law, where a lot of people have tried it on. They've thrown the whole cost of doing an MBA, which is the nexus to their actual earning of an income is pretty slight, pretty tangential. And there's been a lot of cases to knock them out. So good on your client for getting a private ruling and getting it allowed. Fantastic. So how do we avoid these ATO issues? How do we get off the red list? Of course, lodging on time. And the most common thing I've dealt with, particularly with new clients that have come on board and said, I've buried my head in the sand for the last 2 years. I know I can't pay my BAS, so what's the point in lodging it? I'd say that's the biggest mistake that people can make. Getting your BAS and your tax return lodged on time, even if you can't pay, is a very good way of demonstrating good faith to the ATO. More importantly, just because you lodge it and it's payable, don't think that the ATO is going to come knocking with the bailiffs. They're not going to come repossess your car or force sale your house straight away. There is a degree of discretion. There are payment arrangements you can put in place. So we've they're more difficult to get than they used to be, certainly, but we can still go out there and ask the ATO perhaps for 2 years to pay off this tax debt. Um, it's certainly worthwhile doing. If you pay it off in time, we can ask the ATO to remit the interest in good faith as well. It does still happen. So I think there's a slide coming up with lots of red ink and scary warnings. It's still better to do it now. Get the payment on the books. Do what you can, chip away at it, even if you don't have a formal payment arrangement, just paying off parts of it. When the ATO case officer looks at you and they see that you're trying to chip away at this debt, it's going to make you a much more friendly contact for them to have. I've mentioned about keeping separate bank accounts. Please do the digital backups. Try and label things. Yeah, it's always nice to have more information rather than less. You don't have to overdo it. Don't have to tell me a story or a paragraph, But if something's a bit unusual, just give it a quick explanation. Nice and easy to do in your accounting software. If it looks like it shouldn't be related to your business, but it genuinely is, just give the reason. Nice and straightforward. And again, check with your advisors. So what we offer at Lawpath is an accounting advice subscription where we've got X number of clients who very, very happily will book in a 30-minute consult as often as they feel like. And the 30-minute consult might take 2 minutes. It might be, hey, Prati, one of my colleagues, can I claim this in the business? Yes, you can. Away we go. So whether you've got an accountant that's sending you bills by the 6 minutes, which is what a lot of accountants do, or you're on a subscription, or you've got a friendly accountant who will happily take your phone call and not charge you, just check in. It doesn't hurt. I often think I would rather a client came to me with a list of 20 deductions and 15 of them were knocked off than only give me one possible deduction. Let us use our professional judgment to knock that list of 20 down to five, rather than you feeling shy and don't not wanting to ask the silly questions. There are no silly questions when it comes to tax. That's why we're here. It's why they pay us the medium bucks, and it's why we want to help you and impart some knowledge on you. So do check with your accountant. Yeah, this is the big red ink one. Red ink one. The Bank of ATO. We used to talk about this in hushed tones amongst fellow professionals, particularly during COVID. So the ATO were incredibly generous to small businesses and to individuals over this time. They were not finding anyone. They weren't charging interest. The repayment plans were very long and had very generous terms. And if you missed them, you could typically reinstate them. This Bank of ATO, when I call it the Bank of ATO, what I mean is that some small businesses took advantage and used it as a free line of credit. So avoid paying the ATO, use that as an effective borrowing to pay off everyone else. Um, I think the last time I ran this slide, or the first time I ran this slide a few months ago, it was the Bank of ATO is closing. I now say it's closed. Those failure to lodge penalties we're seeing them lodged more and more quickly and more often. They can be $1,500 a month. Paying those penalties is not a tax deduction. You do not get a tax deduction for paying an FTL penalty. Interest on those late payments. Interest again used to be small, but back in the pre-inflation era, it was pretty affordable. It made sense. You could get it waived anyway. It's now, I can't remember the rate. I believe it's about 11%. And from 1 July, that interest too is not going to be deductible. So unlike interest on your business loan, which of course is a tax deduction, interest on a loan from the ATO, because you ain't paid them yet, is not going to be deductible. What that effectively means, because you don't get a deduction for it, that interest rate is more like 15, 16% when you consider the tax effect. So they've really withdrawn their nice feelings towards small businesses a little bit there. And again, if you're paying your super late, which is after 28 days after the end of the quarter, that super payment is not going to be deductible either. So it's getting more and more difficult to, I guess, get the benefits of your tax lodgements unless you're doing them on time. So there's more audit activity too. I'm getting more phone calls, stricter. And when I talk about dire consequences, obviously at Lawpath we have a lot of new businesses because it's such an easy platform to use if you've had a new business idea and you register. What I would say is that if you go away with your big idea and you go and work on it and don't turn your mind to your tax compliance, if you come back 2 years down the track, you are likely to have some very big surprises. And they could be very expensive surprises, and they could cause you to have to shut down your business. So again, I beg of you, do turn your mind to it. Get someone else to do it. It's not the most exciting thing in the world. Get someone else to do it, and then let them keep you compliant. When we're talking about tax planning, of course, you've all gone out as I've been talking, or you've paused this webinar recording. You've gone and reconciled your books, your zeros in tip-top shape. Everything's looking beautiful. What can I still do in the next 5 weeks to lower my tax bill? Well, I can tell you what. If you don't know where you're up to, if you haven't reconciled your books and you don't know how profitable you are as of the 26th of May, 27th of May, it's going to be very, very difficult for you to do any tax planning. So that's the first step in reducing your tax. Get your financial reports up to date. What can we do now we've done that? We've got two main levers: income back, expenses forward. Where you can control those levers. If you can defer your income, I would much rather pay income in the 2026 financial year than pay tax on it in the 2025 financial year. It's a whole 12 months difference potentially just by delaying an invoice a month or even less. If you were going to invoice on June the 28th and you hadn't done the work till July the 2nd, do it on July the 2nd and invoice then. And of course, the other side is bring forward your expenses. As a small business, you are entitled to claim for annual subscriptions that you're paying for now. So if you're paying your Lawpath annual subscriptions in May or June, it doesn't matter that most of your usage will be in next financial year. You do get to claim the full value of it as a tax deduction this year. So it's a good time to renew if you haven't already. Likewise, any other big expenses that you had out there, now's the time to do it. If you were still thinking about buying some assets, the instant asset write-off, the bane of every accountant's existence, because no one can agree when it's going to be in place, or no political party can agree on just getting it done. It has not been renewed. So the $20,000 instant asset write-off, where you can spend up to $20,000 on a business asset and get the full deduction now instead of depreciating it, that will expire on June the 30th. So you do have to have it ready by then. Will it be renewed into 2026 at some point down the line? It's anybody's guess. Don't rely on it. Don't rely on politicians unless you have to. And there's certainly been no promises out there. So don't expect that this offer is going to be available to you next year. Um, yes, okay. So what else have we got? Year round habits. So it's not just tax planning can't just happen at the 25th of June. It's too late. You've got to have some year-end habits. I'm sounding like a broken record. That separate bank account, the accounting software, having an accountant that you talk to regularly, there's sort of no-brainers at this point, but just a reminder. Some common mistakes that we do see. I've seen them all. I dare say I've probably done a couple of them myself in my own personal return. I'm not perfect. I think like the lawyer that self-represents having a fool for a client, I say sometimes accountants have their own worst interests at mind. When you're in busyness of tax season, you often forget to do your own. So I did a bit of a 2-year catch up myself recently. But here are some mistakes that I do see small business owners make. Again, mixing personal and business. It is so easy to do when you're on the fly. And if you think, "Oh, I'll just fix it up later, I'll transfer it back," you'll just forget. You got too much going on. So the incorrect or the missing of the income reporting, a lot of people these days are doing the side hustles, little side businesses, driving for Uber or Dash Door, things like that. It's all income. It's got to be included somewhere. Private expenses, likewise, clothing is a big one that pops up. We had a shocking case recently of someone that was assured that they'd be able to claim $50,000 of very expensive luxury clothing that was definitely not directly relevant to the earning of income. So unfortunately, that was knocked back. Super is a big mistake for small businesses. And I would add to that wages sometimes. Depends on how you're running your business. Do talk to your accountant on this. It's not universal advice. You might be in this scenario where you've gone in with a mindset of, hey, individuals can pay up to 47% tax. That's true. Individuals earning over 190K can be paying top marginal rates on that top little bit of income of 47%. Well, companies only pay 25%. You might have got yourself into that mindset and you could be missing out on a deduction. If you're running your company on the smell of an oily rag and you've been choosing not to pay yourself salaries, but you've got a bit of cash put away, if you've got two partners, potentially family partners as well as business partners working in a business, and you've got that really lean business there that's made $40,000 of profit, be claiming them as two lots of director payments of $20,000 each, because that $40,000 to the company is a deduction. Bring your tax bill down to zip. In your personal names, you've got $20,000 of income each. That's the tax-free threshold. So you won't be paying a lick of tax on that either. So it's of course Less beneficial the more money we're talking about, but there is still often a benefit to taking profits out before they're profits, if you know what I'm talking about, if you're boosting up your expenses in the business. Um, Voluntary super contributions are another good way to do that, particularly if you're close to retirement age anyway. And so the end is in sight. It's not like for people in their 20s and 30s when putting money into super is probably the lowest of priorities because you're not imagining it ever coming out. If you're in your 50s, particularly late 50s or into your 60s, putting money into super while you can, getting it into a very tax efficient vehicle for yourself and getting yourself a personal tax deduction for doing it is a great thing to have a look at. What else are we talking about here? I think we've mentioned all of these. Keep all your records, just so I don't sound like a broken one. How do we keep things clean? GST registration is a funny one. There are actually plenty of businesses under $75,000 turnover that should still register for GST, even though it's voluntary. Particularly NDIS businesses, if any of you are out there. The reason being that you don't charge GST on your income if you're providing most or eligible NDIS services, but you can claim GST credits on your expenses. So often registration is not just compulsory, but sometimes it's advisable even when it's not. And of course, you've got to have that ABN up front anytime you're going out and doing business anyway. So maybe it's the time to register for GST. Making sure you categorize things. Again, it makes it easier for us to see what is deductible. Potentially, just by categorizing things, we can see what you've missed. We have a checklist that we go through that we expect certain businesses to have. If you've categorized your expenses correctly and we can see that you haven't included something, it often sparks a question. It's the first thing I do when I review a senior accountant's work when I look at a set of financials, is I look at this year's compared to last year. If I see a whole heap of deductions in last year and I'm seeing a lot of dashes or zeros in this year, that's my first question. Did they really not incur this expense this year? Did they not pay for that? Potentially we're missing things. Potentially there's a new bank account we don't know about, or you've paid things personally. So it's a great opportunity to really do that. What I would say for keeping things clean, saving for tax. I'm going to go on a rant here. I did see an atrocious Facebook ad from the ATO that said all you need to do to make sure that you don't have an unexpected tax bill is put aside 1/11th of your turnover, of your revenue, and pay it by BPay to the ATO once a month. That is the worst advice I've ever heard, and I can't believe they paid using taxpayers' money to push this out to small businesses. Let me tell you why that's wrong. First of all, it is a very commonly known rule of business, and particularly small business, of paying your expenses when they're due. You don't prepay expenses for no reason. That is crazy. From a cash flow management perspective, just paying money to the ATO once a month just to be ahead is the worst strategy I've ever heard of. Secondly, you may be paying too much. You haven't factored into the account that you've got GST credits. If you're only paying 1/11th of your income, you're not factoring into your account your credits. You might be overpaying. Even worse, you might be underpaying. It doesn't take into account things like PAYG, withholding, the tax on your salaries. Basically, the only thing you can be assured of if you follow that advice of the ATO is that you will get it wrong. So don't listen to them. Do put aside money. Don't pay it to the ATO. Have a little, if you can have a free savings account in your business bank account, put it put it in there and some interest on it. And only pay when you have to. I take their point that it's a good idea to know that there are tax bills coming. Engage with an accountant that will help you have a tax planning strategy that will set out our expectations. This is what your tax calendar is going to look like. We expect that you'll pay this much, this much, this much. My goodness. I'm very sorry if anyone from the ATO is on this. I do always sing your praises. That was a shocker. And I'm not going to tell you to keep your documentation again, everyone, because you are all going to leave this thing in droves. But do set calendar reminders. Make sure you're on top of stuff. If you know you've got this sort of accountant that doesn't keep on top of stuff for you, sack them or at least put in your own reminders. What are some deductions that you might be missing out on? And look, we've put this in for freelancers and sole traders, but I'll go so far to say it applies to everyone. Things like travel costs. Talk to your accountant. They're not all going to be considered. But if you did some business activities, if you went to a business conference when you're also on a holiday, get a partial claim for it. Why not? Your home office expenses, as long as you're apportioning them, things like software that you use for work, these are all what we think of as no-brainers, but we do this for a living. Again, go over the top. Give your accountant too much. Let them tell you it's not a deduction. That's a general rule across the thing. If you've got an accountant, you won't be missing these deductions. It's things like prepaid expenses, education and training for you and your staff, and things like depreciation if you're not using the instant asset write-off. I'm going to skip over that client expenses one because someone very rightly pulled me up for that. That shouldn't be on the slide. Client expenses, things like coffee, are generally not going to be tax deductible unless they're in the office as part of a meeting. So just be careful on that one. We've talked at nauseum about your tax obligations, sort of about getting that up to date. I'm going to hand you back to Joel, who's going to talk about how Lawpath can help you with ongoing advice and support.
Thank you so much, Tim. How's everyone doing at the moment? Can I get some yeses if you are enjoying yourself in the chat? If you're enjoying the vehemence in Tim's voice, he's a passionate man. It's the kind of person you want in your corner. I'm loving it. Thanks, guys. So, uh, through our subscription models here at Lawpath, a cost-effective and fully tax-deductible option, you can get much of what Tim has mentioned today, organized through us, as well as so much more. So what we can do is ensure your accounts are reported correctly, reported on time, and help you make better financial decisions for your business so that you leave your business in a better position year on year. That's what our goal is to do to assist you. Providing you with access to our accounting teams, whether it's through a consultation or through our live chat, so you can easily be in touch and instill in you not only peace of mind, but also confidence that your business is in the best and most diligent hands it can be. Much like what Tim mentioned earlier, do you want to unfortunately pay full price, depending on what kind of accountant you have, and not to step on any accountants in the call's toes at the moment. But if someone's going to charge you full price for something that can be handled in 2 minutes, as opposed to just having unlimited calls for 30 minutes, it's a no-brainer realistically. So I do hope that everyone does have a solid accountant. But if you don't, please, end of financial year is coming up. I'd be more than happy to have a conversation afterwards. Our legal, accounting, and tax bundles. You will have unlimited consultations with our lawyers and accountants. With the lawyers, unlimited on-call contract reviews, both for your external commercial documents and documents you use on the platform. What we start with is a discovery call, usually in regards to legal, but it's the same with the accounting as well. So we can understand your business in as much detail as possible, deal with any roadblocks you're experiencing, address the legal and accounting gaps within your business that you're unaware of, as you don't know what you don't know usually, and amongst other things. We recommend documents you need for your business and finally lay out next steps for your business in regards to any future comings or goings. Um, in regards to the legal advice plan, a lawyer can advise on the legal implications of different business structures. So, for example, sole trader, partnerships, PTY LTDs, or trusts. They will help you understand your legal responsibilities, compliance requirements, and personal liability as well. And with the accounting, an accountant can assess which business structure will be the most tax efficient and provide advice on how the structure impacts financial reporting, tax obligations, and long-term profitability. So these are just really, really trying to condense as much information about our plans as possible because we are conscious of time. Legal, accounting, and tax. Legal, unlimited 30-minute calls with the senior lawyer for 12 months at no extra expense. Same with the accountant. Obviously, they're different. The lawyer is going to help you with everything, as I mentioned earlier. The accountant's going to help you with your bookkeeping, payroll, setting up your Zero account, MyOb, whichever your preference is. If you do have a free account on Lawpath, or if you are a paid subscriber, or if you're an accountant registering companies on behalf of your clients through Lawpath, On the homepage, you will see products and pricing, and next to that will be partner offers. Now, if you have a free account with us with the partner offers, you will get all of the partners, the Westpac, Zero, GoDaddy, all of that is available for you there to use. Let's say you created a free account with us a year or two ago. It will not expire. That partner offer will always be available for you. So if you are interested in hopping on Zero, and you want to hop on our accounting advice plan, it's a confluence. They are going to go hand in hand. Now, we can't promise any of our advice is going to make you a millionaire, but we can guarantee that if you are ambitious enough to shoot for the stars, then we can support you the entire way. That's essentially our goal here at Lawpath and what we provide with our plans. If anyone has any interest in learning a little bit more about our plans, please go ahead and type in yes in the chat and I will jot your name down. Even if it's general questions, that's fine. We can just have a general conversation. If you're not ready for a plan at this point in time, but you just want to know a little bit more so you can build contingencies, more than happy to have those conversations. Keep in mind, end of financial year is coming up. All our plans are 100% tax deductible, so it's always a good time. And as you can see on the screen, grab 30% off your tax plan. Now, Tim, I've asked you this a million times in regards to tax, but what, I guess, on average, what is someone usually paying for this year's tax return and last year's tax return if they haven't done it, and the business has been around for, let's say, 2 years or 3 years, and the average turnover income or so is about 100, 120K. What are they
Yeah.
usually looking at paying?
I would say in my past life as a traditional accountant in a Sydney-based firm with a very nice office, we wouldn't be getting out of bed for less than $5,000 or $6,000, and that was again pre-inflation. It's probably gone up, and that's per year. And that is just simply going back and doing the historical records. This is what the company did. It's accountants aren't out there driving Ferraris, most of them. I do know a couple. The reality is the obligations on tax agents are enormous. They're getting more. We've got a lot of work to do behind the scenes. There are costs involved in doing and being a good quality accountant. We've, of course, had to pay for everyone's education. We have to pay our accountants well, otherwise we'll lose them to other industries. That's what you're traditionally looking at paying. The law path, Sarah in the chat has asked me, how can we offer it so cheap for a high quality of service? It's because all we do in my team is accounting. I used to have to go and do business development dinners and lunches and golf days that effectively clients were paying for. I had to do administration. I had to chase fees. I had to record my time in 6-minute increments. At Lawpath, we don't do that. All we do is work. So don't make that. It just sounds like I've got a slave mill going. What it means is that accountants that work for us are just doing valuable work that they like doing and not doing all the fluff on the outside. That's why we can offer these services so cheap. And like you mentioned, Joel, our success model here is when you say someone's come to us with 2 years of outstanding tax returns, when we quote to get that fixed up, to get you compliant, we're not making a cent. We're actually making a loss every time we do that because what we know is that for our model to work, we want happy clients that are on track, that we have a cadence. We talk to them once a quarter. We do their BAS. We do their financials once a year. So we'll take the hit to get you there. We'll help you get caught up. It might be $1,200, $1,500, depending on how complex your business is, to get you caught up, and then we'll go forward. So that's the way that we do it here, Joel. That's what's different from between us and a normal accounting firm.
Brilliant. Thank you, Tim. Real quick, Mark Kobas, Mark, will this webinar link be emailed to our email address at the end of the session? I do believe I can recognize a lot of names. So for those who have been here, I guess you guys pre-existing webinar attendees will just have to get used to me saying this. But yes, Mark, absolutely. For those of you who are new, we will send an email out at the end of this with the PDF for the slideshow, plus the information related to today's webinar, as well as all of our plans. Now, one thing that we don't send out, and maybe I will start adding this to the email, is we have someone who uploads these sessions to our YouTube channel. So if you type in Lawpath on YouTube, you will get it there. But they usually do that a little later because they obviously have to get rid of bugs and reduce the video down. So we don't always have time to send the email out and link the video together, but we might work to do that just so it's all in one spot for you guys. Um, Now is a really solid opportunity for everyone to throw some questions Tim's way. If you have any Q&A questions, or if you just want to chuck it in the chat, we would love to hear it.
And while you're doing that, Joel, I might actually finish off my slides, mate.
Oh,
We've moved the pitch up a little bit to try and keep people on for a little bit longer.
indeed we
I'll
have.
quickly please write your story in there. Yes, Marina, we do have a YouTube channel in there.
I'll
Uh,
send the link over to you now. Thank you, Tim. Apologies.
No worries, mate. This is a quick one. Look, finalizing your financials, we've already finalized it mentally because everyone's already paused and gone off and finalized their stuff. It's basically making sure your zero or whatever system you use is reconciled, that nothing is missing. The most important thing to factor in is the bad debts. A lot of people forget to do it. If you're sitting with a trade debtors listing and you know that you're not going to ever collect some of these things, you can sit down, scribble a little resolution that say that we write off this debt. Fantastic. You've at least got yourself a tax deduction for the annoyance of someone not paying you, which is the worst. Doesn't mean you can't still chase them, by the way. And if they pay you later, you can just reverse the effect. So do make sure you just scribble down that little declaration. We have that document on our platform as well. So go and have a look for it. Look, your key financials. If you've got an accountant, your accountant does this for you. Don't you go and sweat it. But that's what we're doing in the background when we finalize your financial statements. And of course, checking super, we've gone through ad nauseum. All right, here's a question that does come up just while people are asking any questions in the chat. Well, why don't I just do it myself? I can do my own personal tax return. Yeah, I do my personal tax return in MyGov too. It's pretty straightforward, actually. It's gotten better and better. I don't use even myself as an accountant. I don't use our accounting platform to do my personal tax return. I encourage you to do it yourself if you can. What about for my business? It's actually really hard to do if you've got a business, particularly if you've got a company. I'd say it's not, well, it is impossible to use MyGov if you've got a company. Here are your options. Your DIY options are if you're a sole trader, you can do that little extra page that's that business schedule to your personal tax return. You can do it through MyGov. You'll probably be able to get through it and it'll probably be okay. Um, as long as you don't have employees or any complex financial arrangements, as long as you're happy deciding what's assessable, what's taxable, what's deductible, as long as you're happy to use the ATO's platform and you can get in and you've linked your My ID or your MyGov ID, whatever it's called now, or if you're happy using third-party software, yeah, that's fine. Go for it. I would just say that obviously using a tax agent, like I think Marina mentioned earlier, it's you're going to get more high quality reports. We're going to prompt you on deductions you might not have thought of. We're going to stop you from claiming things that you shouldn't, and that will red flag you for audit activity. I would also say that there is an agreement, an arrangement, a sort of a professional mutual courtesy between tax agents and the ATO, where we are entrusted, which means that when we lodge things, there is a higher degree of faith that they're correct. If you're going out there and self-reporting and self-declaring, they don't have that because they don't know that you're a reg. They don't know that you know what you're doing, the ATO. So to become a registered tax agent it is an arduous process. You've had to have had a lot of training and a lot of experience to become a registered tax agent. So there is a degree of trust to put in. And Marino's just said with new clients who've done their own returns, they find errors. I would say that is as close to 100% my experience as well, Marina. So thank you for that. Look, if you're a company and you're trying to do your own tax return, I think there are a few platforms out there that are all charging. You can't do it for free through MyGov. You can prepare a paper return. And again, it feels like I'm bagging on the ATO today. I'm genuinely not. But if you send a paper tax return to the ATO, and if you get it processed first time without having to resend it inside of 3 months, I want to hear your story. I want Hollywood to write the script. I just don't believe it's possible. I- you scan it, you send it through electronic mail, you send it through the post, you're still following up 2 months later to try and get it done. Paper tax returns are the worst. Please don't do them. It is a nightmare. Why should you use an accountant? Of course, it's more businesses are complex. We know what we're doing. We can make sure it's correct. We can make sure that you're maximizing your claims and not overclaiming as well. And just the peace of mind factor as well. I think if you're out there in today's small business environment, it's tough. You've got enough things to worry about without having lurking in the back of your mind. Oh, those last 5 years of tax returns or 4 years of tax returns, did I get them right? Have peace of mind. The worst thing that happens if, oh look, maybe you got an accountant that did a dodgy job on you and you still get audited. Well, that's the time that you'd go and sue them. And of course, they've had professional indemnity insurance, so they can take the blame. So just that peace of mind of having a tax agent in your corner is great. We can also help you with payment arrangements. We're very good at it. We know what works. We know what doesn't. We know when to push back and ask for something a bit more generous. We know when to accept what's good. So we're very good at doing payment arrangements and negotiations.